Okay, so getting back to 1998, the patterns that we look at are never going to be identical. We're looking for moving averages, a higher time frame, consolidations, price patterns, bull crosses, golden crosses, bear crosses, death crosses, bull flags, bear flags, things like that. So I thought we were around right here in this price pattern, right? It's possible that we're here and we do bounce and continue to be on, continue to use this analog of 1998. You can see we had a 2-day close right here. So is it possible we're, although we didn't see the zigzag, we went straight down to there? Yeah, that's possible. Even if that is possible and we haven't diverged from this pattern, then, those lows we saw on Friday are, we talked about the pivotal lows. Those truly were pivotal. Let's see, back then, 12-15-50, 12-17. So yeah, the lows were not broken. That's very interesting. So if we were about here in the price pattern, that's why I assumed we weren't going to touch the 50 SMA. My assumption was wrong. But if we're more like around here with this and we do continue to have this bullish price pattern, things still could be sloppy like I suggested. Let's just say we're right here. Things don't really start to work higher until right here, which is about a month later, which puts us into roughly the middle of June. Okay? So I think bare minimum, you're going to be in this type of pattern. And we'll know, like I said, if we see price weakness below Friday's low, that's going to be something that's very bearish. And, I would imagine the ESFL is going to be stacked with a lot of short setups. What are the odds of that happening? It's hard to put odds on it. I would say 30% chance. I would say the 70% chance still lies in the bull's corner. Number one, because we're the week before OPEX, and that, like I said, they turn a switch the next week, and it's crazy how it works. But number two, let's just look at the weekly real fast so we understand what's going on here. You can break something intraday and still be fine, and that's really what's going on in the whole scheme of things. The close is really what's the most important. And when we look at this weekly, we could get knocked out of trend. That doesn't mean you're going into a downtrend. It means things could be sloppier, right? I assumed we were going to be in around roughly 100 handle trading range. Now, this trading range could be, how low did we get? 28? Let's just call it 28, 26. 28, 26. So what's that? 130, so let's just call it 135. That's 135 handle trading range. That's the range we could be in until mid-June. So there's a chance that I do stake cash in my investment and swing long cons and just take day trades until the market shows price strength confirmation that it wants to have a sustained move higher, especially since we've had 3 great uptrends this year. So understand that's me. Some people, once again, they're still swing long Apple from $50 or swing long Tesla from $44 because they're swing traders. I'm not a swing trader. I've told you that from the get-go. I'm short term. Sometimes I hold swing positions for multi-months, not very often. And that's just me. And I trade my investment accounts, my retirement accounts. Some people stay long, or some people don't micromanage like I do. And that's why you have to trade your own risk profile.